Welcome to Governance Minutes, brought to you by the Society of Corporate Secretaries and Governance Professionals, and knowledge partner host, corporate board member, along with contributor Thomson Reuters.
Welcome to Governance Minutes. I'm your host, Darla Stuckey, from the Society of Corporate Secretaries and Governance Professionals. And with me today, I'm happy to have Chuck Callan, the Senior Vice President of Regulatory Affairs from Broadridge Financial Services. Chuck, welcome.
Thanks, Darla. It's great to be here.
It's August, late August, as you guys all know, so proxy season is largely over for calendar year companies, and Broadridge has done their annual statistics. So Chuck's here to talk about those things, and I just want to give you a little highlight. We hope to cover the overall high-level voting statistics, what happened to the retail voters, how it impacted say on pay, a little bit about cost savings in e-delivery, cost savings for issuers, and finally notice and access. And there's a little bit of a story there. There's some trends, interesting trends. So I'm going to start by asking Chuck to just give us sort of the high-level voting stats, quorum, retail institutional vote, voting instructions, things like that.
Great,
Chuck?
thank you. And I'll also highlight where there are some differences from last year and some of the trends that we're seeing. Each year we process between 11 and 12,000 shareholder meetings for U.S. companies and mutual funds. And during the proxy season, which we've always defined as February 15th to May 1, we typically process somewhere on the order of 3,000 to 4,000 meetings. So if you will, there's a bit of a seasonality to it, and there's a bit of a pig in the python. What we noticed this season is that companies actually had their meetings later than they had last year. And so we've had to adjust our statistics to reflect that. The period for the season this year is from March 1 to June 1 rather than from February 15th to May 1. And what we did was we looked at, in essence, the same store analysis. So we took all the meetings that occurred in the season last year, and we looked at when they occurred this year. And in fact, we noticed that quite a number of them occurred several weeks after they had usually occurred. We've heard anecdotally that one of the reasons for that is that companies felt they needed more time to prepare for say on pay, right, and to communicate more with their shareholders, and that was a significant reason, we think, why some of the meetings were later this year. In terms of the voting, the average quorum, which we define as of the shares voted, both with instructions and broker votes in total, as a proportion of the shares that we process, and that was 82.7%. So in other words, without any additional solicitation cost, the average issuer would see 82.7% of the street shares voted that Broadridge processes, right, which is, of course, the majority of the shares.
Right, and that's similar to last year, or the trend?
Similar to last year.
Okay.
What we noticed was that there was actually, if you break that 82 or 83 points into the instructed shares, in other words, I received the ballot and I sent the vote back, versus the broker votes for the uninstructed shares on those few matters that brokers can still submit those votes without specific instructions. What we saw is that the instructed shares went up slightly from last year, and the broker votes as a percent of that quorum went down a little bit, which of course is logical because broker votes are, fewer and fewer proposals are eligible for broker votes.
Right.
We also saw fewer mutual fund meetings as well.
Okay, but interesting though that you did see more instructed votes. So that means that retail holders are actually getting the message that the brokers aren't going to vote for them and they have to do something in order to vote.
Well, I hope they're getting that message. There's certainly a lot that the New York Stock Exchange and others have done to the Securities and Exchange Commission and Broadridge in terms of the communications that we process, and issuers themselves.
Issuers as well, I think, they put on their websites, trying to explain that to people. It sounds like maybe the message got through.
And the Society of Corporate Secretaries, and I'd like to think that the message has got through, but unfortunately we continue to see somewhat of a decline in the participation of retail shareholders, which is, I think, troubling to some degree. But I'm hopeful that it is reversible with technology in very efficient ways. Just to put it into perspective, of all the shares outstanding of U.S. publicly held companies on the street, 38% of those shares are owned by retail shareholders.
Retail shareholders.
Retail
now,
shareholders.
Just explain this to me, Chuck, a little bit, because I have to ask this question every time. Is a retail shareholder somebody like me that has a managed account with a broker who basically just puts me in mutual funds and I've got a few equities? Am I a retail holder then, according to your definition?
Well, we would consider retail holders everything but institutional holders,
okay,
and everything but managed accounts. So when we look at the retail holder, we're thinking that you have a brokerage account, and in that brokerage account you own equity securities outright. So you might own
right,
1,000 shares of company A and 2,000 shares of company B, and we would regard you as a retail holder that has two equity positions that can be voted. Mutual funds, of course, the retail investor owns units, owns shares in the mutual fund, but does not own the underlying shares.
And those are voted by institutional voters?
Those we lump as part of the institutional ownership and the institutional voting. And similarly, managed accounts, although those are different than mutual funds because you as the individual retail investor would hold a position outright in a managed account.
Right.
But because those positions are processed, they're consolidated, and they're typically displayed for an investment manager on an institutional-like voting platform, an electronic voting platform. For the purposes of our statistics, we would include them as institutional, as part of the institutional category,
okay,
at least not part of the retail category.
Okay. So then going back to, so you said 38% of all equities are held by retail holders. So
That's
then
right.
I guess the balance is held by institutions.
By institutions.
And then I think you were about to say, or maybe so how many of each of those categories voted or vote typically, and how many voted this year?
Yeah, so then if you look at all the votes that get cast, so those 82 or those 83% of the shares which are voted, and you split that up, about 85% of that voted amount are the shares from institutional investors, and about 15% of those shares voted are from the retail investors. So although the retail investors make up a significant portion of the shares owned, their voting is at a significantly lower rate. And the troubling part is that it's actually been declining over the last several years.
Well, let's talk about that a little bit. I mean, I think as issuers and secretaries of issuers, we know it's been declining, and we have had a push to try to do more to get retail holders to vote. What have you seen, or what are some of the ways that companies can do that? Anything new on the horizon that we don't know about or we haven't thought about?
Well, yes, and I think what we see is that retail investors, when they receive a full package of proxy materials, the voting rates in comparison are relatively high. But of course, the full package is expensive,
right,
for issuers.
Right.
On average, a full package costs $1.79 just to mail.
Right.
And then there's the printing costs.
And depending on how much disclosure we have to put in it and how many pages it is.
And whether you go, the quality of the paper and et
right,
cetera, and how many units, whether there's a minimum from your printer and all that sort of thing. The printing of that can be a couple of dollars to several dollars, depending on the particular issuer and the particular
right,
meeting.
So many issuers have then moved to this notice and access model to sort of save those costs, right, but then I think that kind of may diminish the retail vote. But
there's about 140 million retail positions were
okay,
processed in the last year. Of those, about 43 million were mailed notices, and over about 60 million of those were e-deliveries. So e-delivery has eclipsed both the mailed notice and the full package just by number.
So that's great news for cost savings for issuers.
Very good news,
yeah,
because it's
yeah,
a significant cost savings, and the retail voting in response to an email is 2 to 3 times higher than it is in response to a mailed notice. So we think technology is the answer, mm-hmm, and really doing things both in terms of responding to a mobile society, creating a more interesting information experience, making that information immediate and available, for example, on your broker's website.
Right.
All of those things help. Just within the proxy season, we launched a year ago mobile proxy vote. And in this past...
Seriously, people will read a proxy statement on an iPhone?
They'll read a proxy statement on an iPhone.
Or a smartphone, should I
That's
say?
right.
I can't believe it.
Well, if you choose to receive email on a smartphone or a tablet computer, in fact, you can now vote that right on your smartphone or your tablet computer. And for the proxy season, we saw that 445,000 positions were voted through the mobile device.
Positions, not shares.
Positions,
so that's
not shares.
position. Okay. So that's a fair.
And on an annual basis, there's some 5 to 5.5 million retail positions that are voted. Now that 445,000 is just the season. So annualized, we may end up with something on the order of 700,000 or 800,000 votes by mobile. So you can see that we're approaching, in terms of retail voting, we're approaching some 15% or more of all of the retail votes that get voted will be made through a mobile device within approximately a year's time.
And you mentioned brokers' websites. So there is an initiative I know that Broadridge has started and that did make its way actually into the New York Stock Exchange Proxy Fee Advisory Working Group report about something called investor mailbox. That may be that's not the generic term, but that's the term for having a icon on your brokerage, basically account on the website saying vote here, or this company that you own, this equity position that you own is having an annual meeting, and here's the proxy, and you can click here to vote. And that, I believe, is favored by many issuers, and Broadridge is sort of taking the lead in that, but there's other ways to build it, or there's many ways to build it or to get to it, but is something that Broadridge is supportive of?
Yes, absolutely. What we see is that a number of brokers on the have made enhancements to their client website interface, and they've added a communications center, and in some cases you can access your proxy materials through that communications center, depending on how the broker chooses to implement it, and execute a proxy vote right there. I think what is perhaps surprising to many issuers is to learn that in most cases, unless there is such a facility, an individual who has an account at a brokerage firm is not able to directly access the issuer's...
You've got to go to another site and put in the control number and rekey it in, or copy and paste it into another place.
Right, that's right.
Yeah, that's it.
So
for those of us that... I mean, every second counts these days. It doesn't sound like much, but I think it is an impediment.
Seconds do count, and we've done extensive surveying of beneficial shareholders, and we've asked them, do you vote? How often do you vote? If you don't vote, why don't you vote? And what they've indicated in these surveys, which we've done online, by telephone, and in focus groups, is that if you make the experience easier and more immediate,
idiot-proof,
they will be more likely to vote. They've also said they'd like the proxy statement to be simpler and things like that. But certainly technology can address a number of the areas of feedback that we've received from individual investors. With the technologies on a broker's website, like an investor mailbox, what we've seen in those dozen or so instances where these things are installed at brokers is two things. Number one, the rates of consent to e-delivery go up significantly over the baseline. And what we believe is that the investor believes that that is a better information experience in effect. So some individuals might say, look, it's hard for me to read the proxy materials on email, or I got a lot of email, just continue to send them by mail. But when they're able to then access those materials through their brokerage website, where they may go daily to look at their
balance,
account or conduct business, it creates a better experience, arguably, if you will, and that's what they've indicated. So they are more apt to consent to e-delivery. When we look at that group of brokers who has an investor mailbox capability versus all the others who don't, we see that the consents to e-delivery are 3 times over a baseline what the others are.
Well, then we certainly have goals then.
There's certainly goals.
We don't have much time left, but I just want to ask you quickly, in the Say on Pay context with retail vote, how important is it? Can you tell us what you've seen about votes on pay plans versus votes for directors in the retail space versus the institutional space? And really, we only have like 30 seconds. But
okay. Retail votes are important.
Okay.
And
okay.
if retail investors were participating at historic norms, in fact, possibly some of the outcomes on some of these close votes would have been different. We've seen that retail investors as a group and institutional investors as a group have about the same for-vote percentage as a category for directors, which is somewhere on the order of 95, 96%. But for the Say on Pay, the retail investors as a group are 91% of the time when they vote, their shares are voted in favor. With the institutions, it's 86%.
Okay.
If those retail investors were to vote at their historical voting rates, then in fact, in some cases where those plans are close, we believe it would make the difference.
Okay. Well, thanks, Chuck. It's always a pleasure to talk to you. Thanks for watching Governance Minutes, everyone, and join us again next month.
Thank you.
Join us again next time for Governance Minutes, brought to you by the Society of Corporate Secretaries and Governance Professionals, and Knowledge Partner host, Corporate Board Member, along with contributor Thomson Reuters.